because the crypto market is just heating up right now as Bitcoin pulls back from the local high at $123,000. Now, in my previous video, I talked about this with gold and I compared it on the chart on what happened back here in 2024 summer when gold started to break out. We saw these short-term consolidation phases where gold would break out and then we go through a little bull flag, break out, a little bull flag, break out, another bull flag, and that's what's happening with Bitcoin right now. And if we look at the indicators here on Bitcoin's price chart compared to gold with the stochastic RSI, we can see the K line, the D line are at 10 and at 6.8 in oversold conditions on the hourly. Also, the relative strength index right now is at 47. If you look at gold here on the left-hand side of the screen, when gold pulled back from $2,700 to $2,500, look at what happened in the stochastic RSI. We reset all the way down here below 20, which is a great sign in an uptrend to find better entry points. Because like I mentioned in previous videos, you do not want to buy when we're in overbought conditions. As you can see, we experienced a bearish cross for Bitcoin all the way up here at like 5 in the morning when Bitcoin was all the way up at $123,000. If you bought in at $123,000 and you did not look at these key indicators right here, well, then you would have been buying when the relative strength index was at 86 and the stochastic was all the way up here close to 100, as overbought as we can possibly get. You want to wait for these indicators to reset in an uptrend and for price to pull back. Similar to what happened with gold right here. When the price pulled all the way back, look at what happened to the RSI. It pulled back to about 55, and then we bounced from these levels, and look at what took place for gold since then. It absolutely exploded to the upside to over $3,300. So I don't think Bitcoin is done yet, but I think we're getting close to the top. And in this video, I'm going to talk about what I'm looking for on the charts and what I can see just based on the facts, not my opinion. I form an opinion based on facts. Nick here. Quick heads up for all you smart investors watching this. If you love to see your crypto actually working for you, earning passive income every single day on your coins, we're putting together something really cool. On July 20th, we're running our first ever free online event challenge. It's called the Crypto Passive Cash Flow Challenge. And it's basically 3 days where you'll learn our DeFi strategies we use to safely earn passive yield on our coins 24/7, even while we sleep. And some people are doing crazy numbers with this strategy alone. And if you had some coins that you're just holding on to, you should join us and discover how to put them to work. We've never done anything like this publicly before, and we probably won't ever do it again. So it's completely free, but we might have to limit spots to keep the quality high and give everyone proper attention with the size of our YouTube channel, over 360,000 subscribers now. So if you want in, just click the link below this video, grab your spot while you can, and now back to the video. So here's the facts. The banks are focusing on ISO 222 and digital asset adoption in the near term because most banks have projects in flight to modernize their payment platforms. While ISO 222 is the priority, they plan to launch other programs in the near term addressing everything from instant payments to ACH and other payments modernizing initiatives, and regulatory requirements are needed for that to happen. So operational efficiency and cost savings, replacing legacy systems, and changing customer expectations are the main motivations for these modernization efforts. And if you look right here, you can see in progress is purple, within 6 months is blue, and then within 1 year is green. And so digital assets right here, 1% are in progress right now. So a conversation I had with Chase Bank with a higher level employee that's in charge of ACH transfers, she didn't know anything about the ISO standard. She didn't even know what it was, which was actually pretty shocking to me because Chase is one of the biggest banks. So you guys are getting access to this information early before people who actually work for the banks get access to this information. It trickles down the pipeline. So 19% are going to be within 6 months, and then within 1 year, 69% of banks over the next 12 months. So you guys are still technically early with this information right here. But in terms of price action on the chart, the train is leaving the station right now. As we talked about in a previous video, when we see these revival patterns take place, looking at Total 2's chart in my video yesterday, we talked about the others chart, which is everything outside of the top 10, and Total 2 is everything other than Bitcoin, so it's including the top 10. And so what happens here is the large caps move first, which is why we're breaking out from this descending resistance, whereas others is actually lagging behind compared to Bitcoin. So we're going to get into this chart in a little bit and talk about what's about to happen next for the entire crypto space. But first, let's look at Total 2, because as you guys can see, back here in November 2024, when we broke this descending resistance, we saw 1, 2, 3, 4, 5 bullish weekly candles in a row. And right now, if we see 5 bullish weekly candles in a row, well, if it's anything like what happened here in Q4 of 2024, then we could see the total 2 chart absolutely explode to the upside. Now, what would be the catalyst for this to take place? And what effect would this have on retail investors? Because right now, if we look at Google Trends, we can see over the past 12 months, interest has picked up a little bit later than price action, because the price action starts to move first with market makers, major hedge funds, institutions pumping the projects that they want retail to buy, and then retail FOMOs in later because they weren't subscribed to the channel watching these videos and buying when the most fundamentally sound projects are oversold. And so now we're at 53 out of 100 over the past 12 months. So retail is starting to come back, and the Fed just dropped the signal. So today, at the start of crypto week, the federal bank regulatory agencies issued a joint statement to provide clarity for banks that engage in crypto-related activities, because they're getting ready to upgrade the system, because FedNow is now live, ISO 222 is rolling out globally, and the Federal Reserve, the same institution that brought us fractional reserve banking, is now being forced to evolve. So for decades, they printed money out of thin air, backed by debt, not by value, a system that enslaved generations. So now they're shifting from a debt-based money to real-world asset-backed digital value system, from opaque to transparent on-chain. So yes, the banks are coming, but we are first. And as a retail investor like the rest of us, you have the choice to opt into DeFi, self-custody, and self-sovereignty. So banks can now treat digital assets like any other asset class. The Board of Governors of the Federal Reserve System just released this document saying the Office of the Comptrolling Currency Board of Governors of the Fed and the Federal Deposit Insurance Corporation directed to all banks considering safekeeping crypto assets, basically holding an asset on a customer's behalf like they do your cash in your bank account. And so it's going to be a race for the banks to collect as much crypto as possible. So what are they going to start to do? Offer favorable yields like what they do for their high interest savings accounts. However, when you watch to the end of this video, I will show you how you can get access to the strategies that they use to earn even more yield than what they'll be paying you, because through the fractional reserve banking system, they only have to keep a fraction of income in reserves, and then they loan out the rest to businesses using your money to make more money and paying you a fraction of the yield as well too. So they've been screwing over the general public forever, and only the smart investors like you are now discovering what they do. And so I'll share that with you in a little bit. And if you guys go to the usdebtclock.org and you click on the secret window right here, you can download this PDF that talks about the new money revolution and the shift to a golden age. And it goes through 1 through 30 on how the first encrypted ledger started, and interest-free tokenized assets, through the tally system, then we get into the Bank of England, then into the colonial script, and then the failed fiat currencies from the past, and how the US dollar is the next one to fail, and then the silver swindle from the Roman era to the USDC era, then how we had greenbacks back in 1862 to 1865. So I think this is really cool, and you guys can go check that out, usdebtclock.org. We'll cover this in future videos. But this is super important because the higher level executives, the CEOs of these major banks know this. They're just not telling their employees. For example, JP Morgan CEO Jamie Dimon has been notorious for saying one thing and doing the exact opposite.
And there are a lot of people who are approaching other people who have name brands and saying, look, we ought to get in this business. We can go borrow money and buy Bitcoin and make money.
Or Ethereum, right?
Yeah, or Ethereum. Yeah, Ethereum. I used to own Ethereum. Wow, I mean, that thing was a rocket ship. Then it kind of died out. People were actually using Ethereum to buy things. But I think people, there's a whole other world out there right now. And like Jamie Dimon today about private equity, he criticized, I mean, I wish, I don't know, you know how these, there are these sites, the site that talks about what events are going to occur. I'd like to go, I'd like to be the bookie on when he does a lot of crypto. He'll go all in crypto. Maybe he does it on the conference call. But I think
that would be a true 180.
Yeah, well, I think that's why you got to check the sites. You got to check these sites.
So a quick refresher, and for those of you guys that haven't seen this, here's JP Morgan CEO of Chase Bank and what he had to say about Bitcoin.
Bitcoin.
Yeah.
This ETF was approved just about a week ago now, and I think a lot of people are trying to understand what it ultimately means. JP Morgan, I imagine if you were a client of JP Morgan, you could call your broker and say, get me some of this ETF. Mm-hmm. What are you telling your brokers to tell them back when they make that call?
Yeah. So this is an important thing. Cryptocurrencies, there are two types. There's a cryptocurrency which might actually do something. Think of a cryptocurrency as an embedded smart contract in it, and that we can use it to buy and sell real estate and move data. That may have value.
The idea of tokenizing things.
Tokenizing things that you do something with. And then there's one which does nothing. I call it the pet rock, the Bitcoin or something like that. And so on the Bitcoin, there's, first of all, and I'm not trying to make a joke here. There are use cases, AML, fraud, anti-money laundering, tax avoidance, sex trafficking. Those are real use cases, and you see it being used for hundreds, maybe 50, $100 billion a year for that. That is the end use case. Everything else is people train among themselves.
And now if you go to chase.com, JP Morgan Wealth Management, look at what they're putting on their website. JP Morgan Self-Directed Investing. Explore cryptocurrency ETFs at JP Morgan. They're actively promoting it, allowing you to discover and invest in ETFs that track the performance of cryptocurrencies like Bitcoin, Ethereum, and more. So talk about hypocrisy here. And so even right here, it says invest for your future on your own terms. Whether you want to invest on your own or invest with their advisors, they're going to start pushing people into these ETFs. And the everyday retail consumer is going to eat it up like clockwork, not even realizing they can make way more money applying the strategies we teach inside of Altcoin Pro.